Hello and welcome to this special report here at XM.com. We'll be discussing the latest tech earnings and the outlook for tech and AI stocks, as well as the broader stock market. I'm Maria Pachurdiz, and joining me is lead investment analyst Rafi Boyadjian. So Rafi, tech earnings are now well and truly underway, with Tesla and Alphabet just reporting, and earnings from Microsoft, Apple, and Amazon due out next week. What have we seen from the tech giants who have already reported, and what should we expect from the upcoming announcements?
Well, Maria, it's been a mostly positive start to tech earnings. We'd already seen decent results from Netflix, and Alphabet also posted some impressive results for both its top and bottom lines. Tesla's results were more mixed, though, as its earnings missed estimates. Even though revenue did not disappoint overall, investors are upbeat about the earnings releases from the remaining big tech. Microsoft will probably continue to benefit from its early foray into the world of artificial intelligence. Microsoft has also been quick in finding ways to monetize AI, so as long as those efforts are reflected in revenue growth, investors will be happy. Amazon, on the other hand, has also been fairly busy adopting AI into these products and services, particularly its highly profitable cloud unit, and this should continue driving growth for the business. It may even offset any potential disappointment from slowing e-commerce sales. Now, for Apple, it has been somewhat of a laggard in the AI race, but its recent announcement on its AI plans managed to silence its critics, at least for now. It will be a while, though, before its investment in AI translates to higher revenue, but in the short term, the company may benefit from a boost this quarter in Mac and iPhone sales. And let's not forget about NVIDIA, which is always the last of the magnificent 7 to report. The bar is high, though, and the company will probably not disappoint. However, the focus this quarter may shift from its products to the company trying to demonstrate to its customers how its AI-powered chips can help businesses to generate more revenue. And this is a broader problem for all companies spending billions on AI technology. Will this investment pay off and lead to higher profits, or is this all just one big hype that's turning into a dangerous bubble?
So given these concerns, what's the outlook for tech and AI stocks, as well as the broader stock market in general?
Well, for the moment, we do have enough evidence from companies like Microsoft that investing in AI can bear fruit. Whether this is applicable for all industry sectors or even all tech companies, it remains to be seen. I guess the more immediate question is not so much whether investing in AI is smart or not, but if it's right for companies to be spending so much of their capital on it. This is something that could become a bigger concern over time, but for the moment, I think tech giants will probably be able to provide investors with enough hope to remain optimistic about the earnings outlook. After all, we are expecting the Magnificent Seven to report year-on-year earnings growth of almost 30% for the second quarter, compared to around 10% for the whole of the S&P 500. Still, the problem is that the markets have been in a somewhat of a risk-off mood lately, so even a solid set of earnings could easily underwhelm, like we saw with Alphabet. Markets have been unsettled also by the uncertainty surrounding the US presidential election, as well as possible escalation of trade frictions with China, whoever wins in November. And for the tech stocks that have already enjoyed an incredible rally this year, it might be tougher than usual to please investors. And for the rest of the market, we've seen some rotation out of the tech sector recently, benefiting small caps. So another round of this is possible, especially if the Fed, as expected, starts to cut rates soon.
Rafi, thanks so much. And thanks for joining us for this special report here at XM.com.